I mean, the key to it is to understand that gold is money and everything else is credit. Okay, and that includes currencies. I mean, the thing that's amazing is that the economics profession doesn't actually understand this. They don't even understand how bank credit is created. They think it's sort of, I don't know, some sort of, reserve multiplier, whatever, but, which isn't. It's not that at all. I mean, that's a separate topic. I mean, the point is they don't understand what the hell is going on. Everybody in Asia does understand, and they know what's happening to the fiat currency. They're getting out of it, and the way you get out of it is to sell it for real money, which of course is gold. Silver is I think, very much an indication, if you like, of the change of policy, because before around about September last year, for decades, China had used its power in the silver market to ensure that the price remained low. Didn't necessarily pin it to a particular value, but bear in mind that China not only is now the second largest nation by silver mine output, but also imports silver doré from particularly places like Chile, also imports other non-ferrous ores which contain silver as a byproduct. And remember that of mine production, something like 60% of silver mine production actually comes as a byproduct of other non-ferrous ores. I mean, basically, they are the largest holders, quietly. I mean, you won't get any statistics, but it is absolutely clear they have accumulated huge quantities of silver. And instead of feeding it out into the market in order to suppress prices, from September last year, they decided that's it. They announced that there was a new licensing arrangement from the beginning of this year for silver exports. And it was clear from the statement that this was, if you like, a bit of a sop in the way that it's sort of saying, no, we're not going to stop exports. But we're just going to look at them a bit more closely, and we're just going to let, a few big, I think it's something like 40 licenses were granted to existing large exporters. So this wasn't really a clampdown on silver exports, if you see, but my goodness, it is. Of that, there is absolutely no doubt. And also bear in mind that household savings in China run at something like 30 to 35% of GDP. So we're talking about something like $5 trillion of household savings accumulating every year. A lot of that is now going into gold and silver alongside bank accounts. Now, we don't see where that gold is because that gold is stored in the Shanghai Gold Exchange vaults. And it's not necessarily reported. I mean, who trusts government reports? But you can see that the banks in China have been accumulating gold on behalf of their depositors and look like doing it at an accelerating pace. So, yeah, I mean, in that sense, I think China is now more proactively destroying the dollar than it was.
China just dumped treasuries. The dollar collapse is accelerating. The post-1945 world order is dead. European leaders are clueless, while China builds a gold-backed yuan. The US economy is already in recession. Bond yields will spike, triggering a crash worse than 1929. Commodities are massively undervalued in gold. The Fed will print, not protect.
The whole thing is actually driven by politics, not a sense of preserving the purchasing power of the currency, not a sense of understanding the economics, not understanding the relationship between the expansion of credit and its value, not understanding that the value of fiat currency depends in large part on the faith of its users in its value. Who cares about that? It's politics. It's politics, politics, politics. I mean, the fascinating thing going back to the hyperinflation in Germany back in the early 20s, is that the finance minister was a chap called Karl Hefferich, if I've said that correctly, who was there the whole time over the collapse of the currency. He was also a finance minister during the First World War. So he oversaw the destruction of the Reichsmark, if you like. Now, this was a man who was a renowned economist and who wrote a book on economics which had the same status, if you like, as books written at that time by Keynes. I mean, would you believe it? Furthermore, not only did this economic expert oversee the destruction of the Reichsmark, but he also was the architect of the mark that replaced it and, appointed Helmut Schacht as head of the Bundesbank to, ensure that there was no, if you like, unwarranted credit expansion. So, but the point I'm trying to make is that even when you've got an expert who understands what's happening to the value of the currency in political charge, then still the politics determines the outcome, not any sort of sense of the economic conditions that are deteriorating the purchasing power of the currency. And guess what? About a month or two later, the Shanghai Gold Exchange announced that it was opening vaults in Saudi Arabia and Hong Kong. We have seen further evidence that Hong Kong is being beefed up to be the international financial center for China, as its CIPS settlement system, the Chinese international payment system, really gets into a higher gear. And the whole concept, if you like, is that these vaults will allow, for trade settlement purposes, yuan, Chinese yuan, to be exchanged for gold. Now, what we haven't got is we haven't got a fixed gold yuan rate. But I have no doubt that what he has done is he has put in place the ability to fix the yuan to gold for international trade settlement. So, and now we have, things have been deteriorating in terms of America's finances. And obviously I don't know what the Chinese internal advice is to if you like, President Xi and his fellow senior ministers. But I would guess that they're making the assessment that the American economy is stalling, and that therefore the US is very definitely going into a debt trap, and therefore the yield on US Treasuries is going to rise materially, and therefore they should advise private sector holders, under license, of course, of US Treasury debt to reduce their positions. And guess what? That's what they did last week. So you can see that the indications coming out of China is that the Chinese now think that the dollar is on the verge of a collapse. Now, how long the collapse takes, we will see. But you can see which way this is going. And we should pay attention, if you like, to these moves because they are extremely important, particularly when you have a stock market with the S&P close to all-time records. You have bond yields tending to drift a little bit lower in this environment, etc. All these things are not looking quite so sure if you look at from China's point of view. And the other thing I would point out is if you look at commodity prices have been rising ever since COVID. And if you look at the CRB index, it's 3 times what it was at the time, which means it's risen 200%. A lot of people have noticed this, but this is actually very, very important. So, from China's point of view, America, I mean, they don't need to do anything. America is just destroying itself. But what China is now doing is it's moving into self-protection mode. What you're going to see is you're going to see an equity market crash, which will be at least on the scale, in real terms anyway, of the 1929 to 1932 bear market. Wow. An additional problem in this is that something like 10 trillion has got to be refinanced by the US Treasury, which means that, you know, foreigners are going to be asked, do you mind awfully if we roll over your obligation into another obligation? Well, you know, this is a bit difficult. So, and on top of that 10 trillion, you've also got about 3 trillion of further financing. So, you know, this is getting into I think a time when the whole situation is becoming extremely unstable, leading to, if you like, the beginning of the end for the dollar. And of course, this is what the gold price has been telling us. I mean, the reason that the gold price has shot up, if you like, is it has anticipated to a degree the further decline in the dollar's purchasing power. So, you know, that's, put it all together, and there's only one thing that's going to happen. You're going to, I mean, but also it's going to be the end of derivative markets, because they all depend, I mean, almost all depend on, for their life, if you like, on a fiat dollar. This is a real crisis. And of course, you know, there's only two ways out of this crisis. The first is for America to default, full stop. Or the other way out of it is to do a soft default, if you like, to collapse the value of the currency in which all the debts are denominated. It's inevitable. I mean, and this is why the political, going back to why the politics come into it. Can you imagine, as things, you know, you get a real bear market developing in US equities, you've got a funding problem in US Treasuries. Putting all this together, can you imagine the Fed not doing massive QE to try and stabilize everything? If you can imagine that, then, you know, please tell me. I can't see it. I really can't see it. It's human nature to look at the price of gold and say, oh, it's gone up so much, and I think I probably missed it, or I'll wait for it to come back again because it's now in a consolidation phase. They're looking at it the wrong way around. If you do that, you know, it's completely wrong. What you should look at is what is actually happening, not to gold, but to the dollar in which you're pricing it. If you think the value of the dollar is going to rally, then don't buy gold. If, on the other hand, you can see that the outlook for the dollar is for it to lose purchasing power, then sell the dollar. What do you buy? Well, one of the things you buy is real money. I'm sure there are other things you can buy. I mean, the commodity complex as a whole is now rising because it has been suppressed. As I said earlier on, the CRB index from 2020 has increased by 200%. That's, I think, the start of it. If you look at the value of base metals priced in gold, while they've risen in dollar terms, I mean, a basket of these base metals priced in gold is now at roughly 16%, 16 to 20% of where it has been, if you like, in terms of its long-term value relationship. So these base metals are very, very underpriced, even in gold, which is real money and which, as I said earlier, holds its purchasing power. You could see these things going up a lot further. And we can take it even further than that. Unless you can see that the politics will allow whoever is in charge, if you like, in America, Trump, Scott Bessent, I don't know, next whatever, to actually address this problem, then basically you're going to find that all these things go to infinity priced in dollars simply because the dollar collapses to zero. That's what happened back in 1923, November 23 in Germany. And there's no reason to expect it to be any different for the whole of the fiat currency system now. I mean, we had in the 1920s, it was a European problem because you had the German Reichsmark, you had the Austrian shilling, or crown actually in those days. There was a Hungarian currency, I can't remember what it was at the time, and also there was the Russian Chernets, which all those, suffered a hyperinflation at that time. But it was a European thing. It was European because these countries had gone off the gold standard, effectively, and destroyed their currencies over the course of the war and following. So, but this time, it's the mighty dollar, which is the standard for all the other currencies. It's the king rat of currencies. And the only ones that are going to escape are the ones who are perspicacious enough to protect their currencies by making them exchangeable, at least in terms of trade. Let's say a new Bretton Woods Mark II, if you like, tie it to the value of gold in terms of trade. They will escape that fate. And so it's ultimately going to be the West's destruction, I think, while the Asian powers continue to rise. Asian powers led by China. India's rapidly trying to acquire gold. Her citizens have got gold.